Wealth Without Wall Street Tribe. I am overjoyed to introduce you to our friend, Garrett Gunderson. You know him, you love him. Welcome to the show, Garrett.
Hey, thanks for having me, Joey and Russ. Appreciate it. Enjoyed our conversations. And Russ and I hung out a little bit earlier without you. I couldn't believe the stuff he was saying about you. I mean, but
man, our audience,
you know, that you had to do that, but it's okay.
Our audience here believes 100% of what I said about you. Oh man, that's so good. I love that. This is a great partnership for us, man. I know you love doing stuff solo, you know, but for Joey and I love this partnership. I get exactly what I want every single time he lets me do it. And you're in. So if you guys, by the way, if you haven't been following Garrett, you need to. He's written a ton of books, more than I will remember. But one of the first ones I remember reading was Killing Sacred Cows. A friend of mine shared that book with me, and I don't know if that was 2013, 2014, somewhere in there. And I was fascinated by just the ideas that you had in there and the way that you could construct them and explain them to people so simply. And I'm just so excited to have you on, as well as you've been doing this comedy routine as well. And that's funny. And hopefully you can pick at Joey a few more times on the podcast, man. So welcome. Grateful to have you on.
It's good to be here. I mean, my favorite thing about comedy is actually doing roasts. And it's funny because the first time I ever did a roast, this girl reached out to me. She was like, "Hey, it's Mike's birthday and on Friday." And I read the email as, "Will you roast him?" That's what I read. So like, Friday comes, I'm roasting him. He's rolling around. But I said this joke where I was like, "Hey, Mike, you have a face that only a woman who loves money could love." And I just saw her face not go well, you know. And I was like, "Oh." And my wife, I was like practicing the roast the night before. She's like, "I think you're going to lose your friendship." I'm like, "Babe, like roasts are meant to be funny, like, but they've got to be kind of mean." And it went so well that he's asked me to roast him multiple times. But at the end of the night, I just walked up to him like, "I just want to say thanks. Like I've never done a roast before. That was so awesome. I'm so glad you asked me to do that." She goes, "I didn't ask you to roast him." I'm like, "I've got the email right here." And I read it. I was like, "Will you please tell some jokes?" So yeah, I mean,
that's about how Russ reads emails too. It's like, "Oh, dude, this is more than 8 words. I'm out."
Oh, dude, if it's a paragraph, forget about it with me. You know, yeah, I'm with you, Russ.
All right, let's talk money, and then we'll get funny within the money, right? So, like, how did all this come about, right? So, for those who haven't had a chance to follow up on your background, tell us a little bit about just kind of how you got into this space and just what you were passionate about at that time that led you to this point.
Was a teenager, I won $5,000 being the Young Entrepreneur of the Year for the state of Utah for the governor's entrepreneur. So that's $5,000. I'm like 17. I'm like, this is a ton of money. I should invest it.
It's like $1 million. Yeah.
Yeah. I mean, it was just like, I remember when they handed me the check, I was like, who else made that much money in that second? Well, a lot of people, but I didn't know any better at the time. Right. And I was thinking, all right, I got to invest this, but my mom wouldn't sign off as a custodian. So I'm interviewing these people I wanted to invest money with, but they're just telling me stuff like, oh, invest in a CD, because it was the president of a bank, right? Because I detailed cars as part of my business, and I was detailing the repossessed vehicles. Or I went to like my uncle, and I remember being like, "Hey, what should I invest in?" He told me some stock to buy, and my aunt pulls me aside. She goes, "He makes a lot of money as an executive, and then he pisses it away in the stock market. You might not want to listen to what he says." And my mom wouldn't sign off. So it was when I was 18 years old, I finally make my first investment, or what I thought was an investment. This World Financial Group shows up, and they're like, "Hey, you can put your money in this VUL. You're going to earn 18% a year conservatively over the next 40 years, and you're going to be a multimillionaire." So I'm 18. I'm like, 18% a year? It's the 90s. Like, sure, why not? 18% never happened in history before, but sure, why not? You know, in this company that's in a basement of town, you know, Cedar City, Utah, sure. Like, this all seems legit. Thank God it was only $70 a month, and 3 months later, I was in an econometrics class, and we ran Monte Carlo simulations on all these different time frames in the market, and found out at my level of funding, had a 97.8% chance it was going to be not around at all 30 years from then, because the insurance costs were just going to eat away at it. And if there was any downturn, it was going to completely change this trajectory. And I found out it was illegal to show 18%. The most they were supposed to show was 12%. But it got me my start. And that actually got me an internship with Guardian Life, because then I started asking more questions. And this woman's like, oh, you should go talk to so-and-so's dad. He's in the financial game, thinking I was going to learn about the stock market. Instead, learned about insurance and got into Leap, if you guys are familiar with Leap, and learned about how to sell insurance. And then I got more into this like whole life game. And then obviously I learned about a whole bunch of other things with that. But that's how I kind of got my start. And then I just got tired in my early 20s of hearing, oh, I wish I would have known this before. So I wrote a book, Killing Sacred Cows. And the entire framework was, what does everybody believe in that's actually not true? But it's so indoctrinated that nobody even questions it. And I came up with basically like 9 concepts that were the main things that were hiding people from wealth. And once they could see them, they couldn't unsee them. It would be easy to make different decisions and choices. And so that was really my start, trying to invest that $5,000, making an investment mistake, and then finding out that most people are not good investors, and that actually stability and certainty make a huge difference in liquidity and all this kind of stuff. So I got really into, insurance, and sold that till 2006.
Garrett, man, there's so many things that are true about what you said. But one thing I just need to warn you, we don't cuss on this show. Okay. So please keep all the obscenity to a minimum. Things like stock market, Wall Street, like those things. Russ doesn't have his earmuffs today. I just need to protect his ears.
Well, let me like, since it's you guys, here's some jokes, since we'll tell financial jokes. Like, I want to ask anyone, like, where's the inspiring movie about Wall Street? Name one, like even an inspiring moment. Like every movie about Wall Street's like Wall Street, which is a movie about legalized white collar crime. That's
right.
What it's about. Or Wolf of Wall Street, white collar crime with more drugs. Or Boiler Room, white collar crime, even more drugs, and Ben Affleck for some reason, right? Would you trust the Wall Street brand with anything else? Like Wall Street Airline, who's flying that? They're like, sometimes it goes up, sometimes it goes down, but hopefully it's going to go up, And then, how about Wall Street Daycare? You guys taking your kids there? Wall Street Daycare, they'd be like, oh, sorry, you lost 7% of your daughter, but it was just toes, and hopefully they grow back. Plus, we may mix up the formula with the cocaine. We kind of got suspect. There was a bloody nose, and she ran around the park a couple times. Like, why are we going, let's put our money with Wall Street? They're trustworthy people. Wall Street is value extraction, not value creation. They've estimated so much wealth for great entrepreneurs. They know how to build this income, and then they convince them they're going to get this lump sum of money by trusting the wolves, and then they end up with a lot less than they thought, and it was extracted that didn't end up in profitability or value creation for the customer. It was, again, pumping of the books, and, it's just, I'm so tired of all that kind of stuff. That's why I'm here and telling jokes.
Yeah, well, we're grateful that you're here telling jokes. I mean, it is ultimately Wall Street is a joke. I don't know if we even talked about this. I was a CFP. I was an investment advisor, and I know that I knew less than most of the people that were giving me money at the time, and they were entrusting me. Like, that's a joke. Like this. I mean, I sent Joey a Facebook message the other day that just a new firm sharing their their 2 newest financial advisors. And I mean, they barely have, been able to brush their teeth on their own without supervision, much less be given money, right? Like, and entrusted with other people, like you said, hard-earned money.
I passed my registered investment advisor test, right? My Series 65, by getting the like program to study and then putting it off. And then on a Sunday, I find like, okay, I have to take the test tomorrow. I should study today. But then it was the way back in the day when the Cleveland Cavaliers were with LeBron playing the Detroit Pistons, and LeBron scored 28 of 31 points to finish the game. And I didn't study at all. And then I took the test the next day and passed. I passed a test that I didn't read really anything for, that's supposed to be this standard of care, or like, and you know what? This whole notion of fiduciary, I got to tell you, they bring the douche to fiduciary. This whole fee-based advising system. Like, oh, what would you do with your own money? You know why they're doing it is because I wish that I could sell 401ks and not know better. Because the problem is, they go, oh, well, life insurance has such big commissions. Really? Really? Because when you sell a 401k, you get a fee every single year. And then when you sell that book of business, you get 12 to 15 times EBITDA. That's an enormous, ridiculous number that's incentivizing people to put $22 trillion worldwide in ETFs and mutual funds that create wealth for the person that's selling it or collecting the money, not true wealth for the person that just sets it and forgets it and hopes for the best. 95% of the time, people are not financially independent in the United States at age 65. That's according to the U.S. Department of Labor, not for a lack of effort, but for a broken model. A model that says neglect stewardship, don't worry about accountability. The market goes up, the market goes down, but guess what? The fees always stay there. I just wait it out, and then they wait it out. And then one day, they're now supposed to start creating cash flow when they never figured it out along the way. That's a travesty. And it's sad because people spend their whole lives doing things they hate to live a life they think they're going to love in retirement, but they have to have interest rates cooperate, which they haven't. They have to have taxes cooperate, which I think is scary when there's $34 trillion of debt. And they have to have inflation cooperate, which people have seen in the last few years that's massively confiscated their purchasing power. So I sound really pissed off. I went from jokes to being a preacher, but hey, this is what you get.
Well, besides the fact that you hurt Russ's feelings saying you didn't study for the test that he failed like 3 or 4 times, I mean, that's just, personal affront to him. The truth of the matter is, and you're pointing out something that Russ and I talk about. We're actually just talking about this. Some of the key factors that have led to Russ and I becoming financially free, creating passive income, were one, having access to cash, right? Which you already mentioned. Most people blindly do not steward that money. They just put it away and they allow someone else to manage it. And number two, what that does is it shuts off your brain to thinking about what I could invest in. What are the opportunities? And so they don't become an investor.
Right.
And so that, I tie that to stewardship. Sounds like you do too. Man, if I've been given this and I want to steward it well, and I totally shut off that part of my brain to be an investor, I am completely leaving my money with the babysitter, and she's walking out the door. My kids are starving in the other room. Like, to your point, they've lost toes or whatever. But man,
whatever.
Yeah. What a crazy formula. And it's your point. The marketing of this very thing is not even positive. It's like the boyfriend who's just a really just complete jerk that the girl just keeps going back to. Like, why do people keep going to Wall Street?
I think that most people say they're investing and they're gambling, pure and simple, pure speculation, pure gamble. And they think that they're better because they're diversifying. Look, if you have a basket of stocks, that's not diversification. What they're doing is diversifying. They're divorcing themselves from the results, or diversifying, spread themselves thin. They don't even know what's happening. And these assets are too correlated. I don't believe something's an investment unless it engages your human life value and you understand why it would earn, why it would lose, and can mitigate the risk. If you can't understand those 3 things, it's pure speculation. And we've been divorced from the results by thinking if we just wait for compound interest 30 years from now, it's all going to be okay. Unfortunately, when we don't learn along the way, then we find ourselves in these really tough spots when the market doesn't cooperate. And the stock market is a public market that's fairly efficient, if we don't talk about flash trading and dark pools, that is. But the only way you're going to have substantial wealth is if you can get into inefficient markets. And so if you discover your investor DNA and you invest in things that are inefficient, like real estate's very inefficient. There's people that are selling it all the time that are losing money because they don't know how to be a steward over that. Right. Intellectual property is a very inefficient market that can have high leverage. Owning businesses, there's tons of people that own businesses that know nothing about business that are willing to sell that business, and you can use major knowledge to make it more effective and efficient. See, that's where people get confused. They think Warren Buffett's a stock market investor. He's not a stock market investor in any way, shape, or form. He's an asset acquirer that he then puts his methodologies inside of that business to make it more profitable because he understands this with the methodology, how to do that. He doesn't even buy businesses that are not in his understanding and wheelhouse. He'll leave businesses away and be like, I don't know what to do with that. I'm going to stick to what I know. And there's a big message in that, but most people think, oh, well, this is the greatest stock market investor of all time. Or they look at someone like Ray Dalio. Ray Dalio diversifies in a way that he has 9 non-related or correlated assets, and his number one function is to mitigate the risk, which actually gets him better return, when everybody else is being peddled to take risk in order to try to get a return, But then the only people getting the return are the ones that take the fees every single year, regardless of performance. Not that I'm upset about it at all.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before, go to what'swhatwallstreet.com/PIOS. There was nothing worse than walking into class when you're in school and the teacher saying, pop quiz day. Why? Because you were unprepared. Are you unprepared though for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
We're going to slowly take our foot off the throat of the money babysitters out there by just giving the person listening an actual example of how someone that you've watched or you've helped use their human life value to truly be involved, be engaged, to understand what they're doing, add value to it, and be able to get value in return. Just give us an example of over the last 25 years that you've been doing this, that you've seen. Just one. I know you have thousands, but just give us one. Everything's going to be
8 years ago, I met with with Dee and Sarah Northcutt. Okay. And I can share this because this is all information they're willing to disclose. I just did a case study for Killing Sacred Cows 2.0 with them. At the time, Sarah was a dentist, and so Dee was a real estate investor, primarily buying real estate that he could house dentists in because he knew the dental industry with his wife, and he knew real estate. So that was where they started. Where they're at now is they still have that, but they've expanded where he discovered there's these iconic restaurants, right? Iconic restaurants come down to a few things, not Michelin restaurants, but diners and restaurants that are downtown that there's a line around because people hear about this place. So his first and foremost thing was like, where could he buy restaurants that are close to beaches or downtown areas? And he could own the real estate. So he'd buy the real estate, and he won't buy these unless he buys the real estate. And then he'll go to the aging owners who are in their 60s, 70s, or 80s and say, hey, I'd like to buy this. Will you sell or finance it in a non-recourse note? He owns the real estate now. He gets the property. It has to earn $700,000 of net income for the year. He takes half of that to finance and pay the owner that he's buying it from. Now he owns the real estate in a great location and an iconic brand. So he's benefiting in the real estate and in the property. And he's, again, finding like he owns the Pancake Pantry in Nashville. And then he built a second location. And he's looking for those properties around the country. And he has a very strict criteria for his investing. And by the way, his investors that invest with him are getting between 14 and 19%, which is much greater than the stock market, with actual collateral, with actual history. So that's an example of applying human life value. And I think that Dee will be a billionaire with his philosophies. He's done extraordinarily well in real estate, and that's what he does. I mean, he's a full-time investor. There's a ton of examples like that. I just interviewed Justin Donald from Lifestyle Investor for my book as well, because we're really close friends, and he's done extraordinarily well in mobile home parks. And again, that's a very inefficient market. Again, using non-recourse loans and having the person seller finance where he makes a down payment. The first part replaced his wife's income. The second part took care of his basic expenses. And the third part actually made it where he had enough money to actually live a quality lifestyle just from the cash flow of the investments. And now everything he buys, he just acquires more assets on all that income, because the income that comes in from just those three parks cover their basic lifestyle expenses. So like, we could go and look at example after example, yet the world thinks it's about funding a retirement plan and waiting for 30 years for compound interest. And it's all too complicated. And they want passive income with never being active in that process. And what happens is the income passes them by, because the people, if they're just handing their money over to something they know nothing about, what are the chances someone's going to give them a huge rate of return? They're actually the ones getting the big return. They're the ones that come up with the ideas, find the great properties, and are active. And the people that want to be completely passive, they're lucky if they get 5%, 6%, 7%, where private capital is producing 14% and higher. That's why the rich get richer and the middle class continue to like work tirelessly and be underperforming with their investments?
Well, they haven't had any reps. They've taken no effort in the process to learning the skill set to be able to be an investor. I mean, we say the word passive investments, passive income, but really you have to be active on the front end in order to gain the skill sets to understand who the right operators are, be able to identify those deals, right? What Dee's done is taken a very unique point of view, like you said, in an inefficient market space, learned how to buy businesses. I mean, we've had so many different people on the podcast that have talked about creative ways to buy businesses, to buy real estate, whatever it is. And when you understand how to buy right, then you can then put in a formula, like you kind of talked about with Warren Buffett, a management formula. When you understand how to run a business, how a business should operate, you can do that within the certain geographical area or the knowledge base that you have and have great success with high probability. All right. You also talk about money babysitters. Let's get into babies. Let's get into kids. You've also pivoted into writing a book with a co-author, Julia Cook, on kids. Talk to us a little bit about what was interesting to you about doing that.
Well, look, entertainment's the gateway to transformation. There's millions that want to be educated, but there's billions that want to be entertained. And as much as I wish people would read every word of every book I wrote, I know that the longer my book is, the less chance that someone reads it from cover to cover. Where that's different is kids' books. Because not only do people read it cover to cover, they read it cover to cover multiple times. As a matter of fact, I'll have my kids' books with me and people will read it right there in front of me because it takes such a short period of time. And they're like, oh, I want to get this for my nephews. And so what I realized is I think that this book can make a bigger impact, because what if kids weren't afraid of money and they understood what it was from the time they were in kindergarten, and they had these questions they could have with their parents to talk about money, because most parents are intimidated by the topic, making mistakes as already is. And so if I could simplify it, which was about investing in themselves, learning about earning, saving, spending, and giving, if they treated themselves as their greatest asset, as they saw that, they could use money to create things now, not later, they can start to think a little bit more entrepreneurial. They could start thinking about like, oh, what is money and how does money work, instead of being confused about it, because everybody's going to touch money in their lives, but there is no instruction manual that comes at birth. And because we don't have the right conversations at an early age, we adopt our fears and try to parents a lot of times, or we look at those mistakes and we try not to make those mistakes. But oftentimes that just is still from scarcity. So it's got pictures, so I know Joey can read it. You know what I'm saying? And
thank you for that.
And it's got small words, so I know Russ will read it. So
you said it was like very short. There's a decent chance I can get through it in a week, right?
Do not believe him. If you turn on like a movie or a show, that dude is asleep in 5 minutes flat. So,
I spend an hour picking the show for my wife and I to watch, and I'm asleep 11 minutes into it. I get it. I'm there.
All right, so I got a 9 and a 10-year-old that love the Tuttle Twins books.
Oh, yeah. I love Connor and the Tuttle Twins. That's awesome.
I figured you guys knew each other. So talk to me about what they would gain. Like, what are some of the common themes that they get from this book? Like, what are some of the specific things?
I mean, just right out the gate, that money, having the basics handled will make you happier, but money by itself won't make you fully happy. And ultimately, the best thing is if you could take care of yourself and get to a place where you've got your basics handled, then you get to think much bigger. Then you get to enjoy life more. And that money is the character in the book, and money's happy, and money has its credit card codes, and sometimes they try to convince money to go beyond what they have, and then it makes them sad, and that there's the crypto clothes and jackets. And so it just gives them a sense that money's not just like this green paper, because most people never even see that it's on a phone at this point, but give them to understand a little bit of those pieces. And in the end, it's that your very best asset is yourself.
So there's the BlockFi coat that
it's invisible. It's like the Emperor's New Clothes,
the Ponzi.
There's the Doja coat, which there's no developers, no one making it. It's just a piece of cloth you throw around and tell people you own it. Yeah. So.
Oh man, I feel like this is like my life.
The Bitcoin coat shames everybody for not having more of it or buying it earlier on.
Oh man, the new idea quote, and that just allows you to once the idea hits your ears, it comes out your mouth.
Yeah, the secret code. I just manifested this money by meditating. Yeah.
Oh man, Garrett, this is amazing. I feel like we could just continue to talk for like hours about all this stuff. We have so much just in common that we want to share the message of financial freedom with the world. We want to continue to demystify these things that people have constantly kind of looked at and thought how money works, and tell them the truth about it. But man, for people to get access to this book and other things that you're promoting, how can they get in touch with you?
Yeah, GarrettGunderson.com is the best way. 2 R's, 2 T's, SON, GarrettGunderson.com. You can buy the books right there. I've got, you can hear my dogs excited about the books even in the background. But yeah, I've got multiple books that you can get there, including the children's book. And buy it there versus Amazon, because I'll actually give you some cool bonuses, like an audiobook or something like that, and bribe you. So that I think Jeff's doing well. Like, I'd rather have the money in my pocket than Bezos' pocket,
Yeah, that's right. Well, I think your dog must have saw your screen and Joey's face scared him, and it's just was barking.
I thought maybe Joey was a therapist, because look at those couches behind him. Like, is it like you just lay there and then tell me your problems, and then it just looks like before you
at ease, bro.
You were a psychiatrist or psychologist there.
Dude, put you at ease right there. Absolutely.
Well, thank you so much, man, for being out there, being an advocate in the financial industry to show people, one, how to bring entertainment and make money fun to learn. And I love the fact that you've pivoted and started teaching kids, because there's not a whole lot of good examples for kids to learn from. Most of the stuff they're learning is just regurgitated information that was bad information from the start. And super excited to share that with some of our younger nieces and nephews.
Yeah, thanks. Appreciate it. It's fun. I like hanging with you guys. We have some good laughs and banter. Like, I just like being the third wheel already and just teasing both of you,
That's easy. Well, we'll have to find another opportunity to collaborate. Thank you to everyone for listening. Hope you found this interesting. Definitely take Garrett up on this. Go to GarrettGunderson.com. Find just one of the many, many books that he's written, whether you have young kids or not. I think you'll enjoy the books that he's written, whether it's What Would Rockefellers Do, or Killing Sacred Cows, or all the other ones, Money Unmasked, right? I mean, it's just so much opportunity there for you to learn.
You nailed the big 3. Those are the ones that I would have listed too.
All right, cool. Well, I don't remember much, but I remember those. So thank you for being on. Thank you for listening. Hopefully you'll share this with somebody you know. If you found value in this, take a screenshot. Just send it to Joey and I, and let us know this kind of stuff you want more of, and we'll keep doing it. Have an amazing day.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand, so that your wealth will never run dry. See you next episode.